Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for December the 14th, 2010. Now our first position for tonight is going to be in March silver futures contracts. We can see that we've had a couple of good retracements back here to the 18-day predicted moving average from vantage point, and we're starting to move higher. Now what I want to point out here is the 3-day attempting to cross the 8-day predicted moving average from vantage point and was unable to do that, and we can excuse me, we can see right here it's very slowly starting to turn its way back up. This is pointing to further strength in these silver contracts. That's my belief. Now, looking at our predicted MACD and our predicted true strength indicator, they're both basically running flat. However, the predicted short, medium, and long-term differences are all still net positive. Now, what we want to do here also is go in and have a look at our short-term, medium, and long-term crossovers. So we can see, I'm going to hit this here so everybody can see that. Now our short-term crossover is now breaking back to the upside. Our medium-term crossover again is running flat but still has an upward bias. And our long-term crossover is still very clearly pointing higher. So we've run through all of our major crossovers and everything is still pointing higher. We're in a little bit of a corrective phase on silver contracts, but all in all, everything still looks quite good based around the multiple crossovers, the triple EMA cross, and of course the predicted true strength indicator and the predicted MACD. Now looking at our daily report for tomorrow, we want to nail down our entry point. We have 2880.1 and 2974.80 as the high. Now there's two ways we can play this with the silver contracts. Your more aggressive traders can sell this 29.74 at the market open tonight and then buy it back once it gets down into this 128.80 area, because again there's a two-sided trade here, but myself, I prefer to trade only in one direction. So I would wait for a pullback towards this 28.80 level, 28.82, and I would look to get into a buy. But again, your more aggressive traders can play both sides, because I can pretty much guarantee you with a degree of certainty that this thing is going to pull back to at least the 2900 area. That's what I suspect. So, but again, at that time we want to look at long positions only. So that's our first position. Now our second position for tonight is going to be in the Forex market. Now our second position is going to be in the New Zealand US dollar currency pair. We're going to be looking at shorts on this pair. Now again, we've had a major retracement all the way up to the 18-day predicted moving average today. We can see here we've hit a high of approximately 75.76, which is right on that 18-day predicted moving average, but then we subsequently closed at 75.09. So what I see here is the potential for a short. I believe that the US dollar is going to gain some ground back as we move on into the week. We've got the FOMC this week, we've got the retail sales, we have a lot of data out of the US, plus we have the month of December. Now the month of December alone is enough to make me stand aside on a lot of these trades this month. December is a very volatile trading month, but these are two of the better trades that I like. So let's have a look at this. New Zealand US dollar, we've got our 18-day predicted moving average sitting at 75.62, then 75.21, then 75.01. So essentially we've closed below most of the major predicted moving averages, which is still a pretty bearish signal. Now looking at our crossovers, we can see that the short-term crossover again is trying to cross to that upside, but it's not really supported here. Our medium-term crossover is fairly fresh actually to the downside. It's only a couple of days old, so that's a good sign. Now, looking at our long-term crossover, it's been in play for actually several weeks, almost about a month. The long-term crossover took place on about November the 17th. That's a bit of a concern for me, but not as much. So I would prefer to stay with longs based on what we've gone through. Everything looks like what we're seeing over the last few days is corrective in nature, and the downtrend on this is likely to continue. Now our predicted medium and long-term differences remain to the negative. Our short-term you can see is breaking higher, but it's still not above that zero line, so that's a good sign also. So with that said, let's go into our daily report now. We know where our 18-day predicted moving average is. We're going to look for the high of the day for tomorrow to actually get into our short positions. Now we can see we have 75.73 as the vantage point predicted high. The neural index is up, so we know it's probably going to move higher, but when it does, we want to use that to set our short positions. So 75.65 is the area I'm going to be looking for, and then I'm going to look for a move back down to the 74.55 area. So potentially a good 100 pip trade here. Now again, your more aggressive traders, they can buy this thing where the market is currently right now, close out the long position, and then flip back over and get into the short position just below that 75.73 level. So those are the market positions for December the 14th, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.